Good afternoon, everyone. So I'd like to start by paying my respects to the Gadigal people who are the traditional custodians of the land on which we're meeting today, and extend that respect to elders past and present. So my name is James Nelson. I'm the CEO of Dirio Gas and Power Company, which is PNG's first 100% nationally owned independent power producer, or IPP, and part of the MRDC group of companies. I'd like to thank the Chamber of Resources and Energy for inviting me to talk today, and I'd also like to acknowledge the presence of all dignitaries who have joined us here today, and thank everyone for coming to this pre-conference session on energy transition and renewables. So today I'm going to be sharing my thoughts on the opportunities and challenges relating to investing in renewable electricity projects in Papua New Guinea. I'll start by providing some context, then explore the wind and solar energy resources available in PNG, offer some thoughts around what it would take to achieve PNG's renewable energy targets, along with some challenges in meeting those. At a federal level, there's a commitment by the PNG government to achieve 50% net zero emissions by 2030 and 100% by 2050. As the economy continues to grow and more large projects are developed across the country, the net zero ambitions will be challenged unless renewable energy is included in the energy mix. The government also has a target to electrify 70% of the population by 2030 from its current position of approximately 15%. The obvious opportunity that exists here is to therefore connect these currently unserved households with renewable energy. The bottom two charts illustrate the generation mixes in the three main grids of Port Moresby, Ramu and Gazelle. So there's approximately 450 megawatts of generation capacity installed by PNG Power and private sector IPPs across the country. More than 55% of this is hydropower, about 22% is from locally derived gas, and 21% is from high-emitting diesel and heavy fuel oil generators. In Port Moresby, gas dominates the generation mix, with Dirio and New Power offering 53% of the total installed capacity with their gas-fired generators. Hydropower accounts for approximately 26%, and diesel and HFO 21%. I should actually as well just make a note that these numbers are indicative, especially in Port Moresby, and don't account for technical constraints which have reduced the available capacity from certain generators in the Port Moresby grid. So, Papua New Guinea's wind resource. This map here is a snapshot of wind resource across Papua New Guinea. It shows the wind speeds available around the country. The closer to red, the better the wind resource and the more commercially viable a wind project is likely to be. So you can see there are some very attractive regions, however they're largely offshore. And that's fine, but for offshore wind to be commercially viable, it generally needs to be built at scale, something typically greater than 500 megawatts. Given the highest peak demand in PNG is roughly 130 megawatts in the Port Moresby grid, building offshore wind at this scale isn't really suitable for the current market. There are some pockets of strong wind resource onshore, and these also tie into areas where the grid is currently developed and demand could be sufficient to support projects like these. Two of these areas are slightly east of Port Moresby and another one in the Ramu Valley. When we look at international benchmarks, we estimate that wind projects are approximately 3 times cheaper than equivalent gas-sized projects over the life of the asset. Another map, this time with a snapshot of the solar resource available across PNG. Again, the closer the red the map shows, the better the solar resource in that particular location. What we can see is a bit of opportunity around Port Moresby and Popondetta and those respective coastlines, but also quite attractive resources in the north of PNG, in Enga Province, Western Highlands, Madang and Morobe, which could easily connect into the Ramu grid. The small scale and modularity of solar also lends itself to other applications such as mini-grids or even rooftop solar. Again, looking at international benchmarks, we estimate that solar projects are approximately 4 times cheaper than equivalent-sized gas projects over the life of the asset. Therefore, if we are aiming to deliver least cost electricity to customers across PNG, both solar and wind should be explored as real opportunities to complement the broader energy mix, although they are only as good as long as the sun is shining and the wind is blowing. Therefore, they would require some firming solution to provide backup power when the sun or wind are unavailable. Looking now at the scale of new renewable energy capacity that would be needed to meet current demand, I've used Australia as a benchmark to overlay into the PNG context. Australia has set firm targets for its renewable energy as a proportion of total capacity. It aims to have 100% variable renewable energy, or VRE, by 2050. The chart on the left plots the forecast growth in solar and wind capacity, the red and blue bars, in order to meet this target. What it also shows is that peak demand, the blue line at the bottom, is forecast to stay relatively flat. And this isn't due to a lack of growth in the energy market, but it's actually due to investment in distributed energy resources such as rooftop solar, demand-side management, and energy efficiency programs. Australia is forecasting that installed capacity of solar, wind, and energy storage will have to be roughly 9 times peak demand within the next 2 years to account for the intermittency of sun and wind. I should have used a different word instead of intermittency, sorry. Translating this to the PNG context, the chart on the right shows an average 24-hour demand profile in Port Moresby, as well as indicative solar and wind yields based on 110 megawatts each of solar and wind projects, which is roughly equivalent to the peak demand shown on the chart. Even though the combined installed capacity of solar and wind is twice that of the peak demand in Port Moresby, and this is just theoretically, for the purposes of this slide, the output of these on a P50 basis is unlikely to be able to meet peak demand on a given day. Therefore, significant overbuild of solar and wind would be required in Port Moresby as well. Otherwise, the shortfall in generation could be met by other sources or even distributed energy resources, such as rooftop solar. All right, challenges for the PNG market. We see 4 key challenges in developing any electricity project in PNG. Firstly, the lack of experienced developers in country translates to increased costs to customers through a lack of competitive bidding, construction delays, cost overruns, and increased maintenance costs. Second, electricity transmission and distribution networks have not been built to connect the 70% household target, so significant investment is required to expand the network. Meanwhile, existing networks have been underinvested in, which has led to significant capacity constraints. Third, given a lack of connectivity and systems to monitor customer demand, forecasting likely demand growth is very difficult. And this is even more pronounced for households who currently don't have access to electricity. How much will a household consume and what will their growth in consumption be? This is likely to be different in different parts of the country as well. And finally, in comparison with developed countries where open markets and disaggregated energy supply chains create competitive tension, which attracts investment, PNG Power's virtual monopoly of the electricity supply industry constrains new private sector investment, which would ultimately deliver least cost electricity supply to customers. Given this, the opportunities for PNG are clear. Disaggregate the electricity supply industry into clearly separate verticals covering generation, transmission and distribution, and retail, and diversify these verticals, allowing private sector participation at each level, which would deliver least cost supply to customers across the country. Develop isolated networks through standalone grids or mini-grids, which could either remain standalone or connect into a large grid over time as networks expand across the country. And build out distributed energy resources, such as demand response, demand management, and rooftop solar. In summary, PNG is in a really exciting phase, given there's tremendous opportunity to undertake massive electrification across the country. And with renewable energy sources now cost competitive, if not cheaper, in certain circumstances to thermal generation technologies, PNG is in a position to invest in a broad portfolio of generation technologies which can complement each other and provide reliable, affordable, and sustainable electricity for its people. To do this, there will need to be a significant level of investment across the sector. If the electricity supply industry was disaggregated, private sector participation would be easier to entice, as risks could be ring-fenced. However, currently, there need to be some investor incentives to de-risk new projects and provide certainty of cash flows to investors. As for Dirio's role, well, we want to be a leader in all this. Our mission is to utilise Papua New Guinea's natural resources to provide reliable, affordable and sustainable electricity across PNG and the Pacific. Thank you very, very much everyone for your time, and I hope you will all enjoy the next few days of this conference.